I am very proud of our wall of success. It's one thing if I say that we have a great community. It is a whole other thing for other members of the community to have a good experience and have an experience that is both profitable and mentally rewarding, where you really feel like you know what you're doing. And that's really where success in the market comes from, having that control over the process. My goal is for you to be the money making asset. And once that happens, everything changes. It's very, very exciting. Pradeep, I just want to answer your question there. And if again, if everybody could please do me a favor, make sure you're addressing all attendees as well as all panels so everybody can share. The boot camp is 30 days. It's 30 days from the day you join. It's not 30 days from October 1st. It's not 30 days from November 1st. It's 30 days from the day that you sign up. So I just want to be clear about that. We have had a few questions about that. So anytime you're ready to join, you don't have to wait for October 1st, November 1st, December 1st. I will tell you this, and I never put a hard sell on it because what we have is amazing. For $295 for everything that you get for 30 days and to have access to me for 30 days is just a tiny drop in the bucket for what most people risk on just one trade. So it's really just a question of, you're not investing in me, you're investing in yourself. So again, that's the end of what the boot camp's about. Tonight, we're here to talk about, thank you, Benjamin. I really appreciate it. Again, if everybody could make sure that you chat to everybody, that would be great. Sure, Pradeep, I could absolutely send that link over to you. Look, I think it's a great investment. I think everybody in the community agrees that it's a great investment. And I'd really, really love to see you in the group. It's just, look, I'll be honest with you, it's an amazing group of people. I think that's really the most, that's really the biggest thing that I'm proud of, is that we just have some really nice people in the community and people that really like working with each other. I'll put the link in here for everybody if you want to take a look a little bit more deeper. And we've actually have to update that page because now we've actually added, a new community forum, which is just amazing. Obviously, we have the coaching calls and everything. So here's the way tonight's going to go. Tonight is the first beginner coaching call. So tonight, we're not going to talk about any trades because that's not what tonight's about. Tonight's about strategy. Tonight's about tactics. Tonight is about like somebody's typed in mindset before, which is a really big part of trading. I have to scroll back and see who that was because that's a good question. Let me take a look. Can you use Fidelity in the boot camp? Yeah, 100%. Darren asked the question, can you just reprogramming your brain after years of bad trading habits? Yes, absolutely. We will talk about that tonight. Danny Pryor, can I day trade with only 4,000 in my account? Well, Danny, you'd be subject to the pattern day trading rule, which limits the amount of day trades that you could make if you don't have 25,000 in your account. You can day trade, but you're going to be limited to the amount of positions that you can trade. So that's actually a good question. So that's not on me. That's not on your broker dealer. That's a regulation in the day trading world. So anyway, I really wanted to tell everybody how much I appreciate that you're spending the time here tonight, because that really tells me how much of a desire that you have to learn. Because let's face it, you could have logged off, the market could have been done, and you could have went straight over to watch Netflix. So I just want you to know that I have a lot of respect for you being here tonight, because you're making an investment in yourself. So for many of you, this is the first time that we're working privately together, so to speak, in this call. So we'll go back and forth a little bit. We'll get a feel for what you need to learn. You'll get a feel for what I can teach you. And then if we decide it's a good fit to work together, maybe we could take it to the next step and you invest in yourself and join us in the boot camp for the next 30 days. But we're going to start out with the questions that were submitted. I'm going to pop them in here as I did. And we will very carefully and slowly go over everybody's questions. And then if we have some more questions, absolutely feel free to post them in the chat. If you're not familiar with where the chat is, just hover your mouse over the middle of the Zoom channel and you'll see chat on the bottom there. You just have to click that if it's not open. And again, on the bottom where you type in the chat, make sure it says to all panelists and attendees. This way everybody can benefit from each other's questions. Okay. William says, I watch you every morning for investment and watch what you preach. William, I can't stress how much I appreciate that, because I've gone through a lot in my trading career, but I do those videos because I want to give back and I want to teach. And it's not about what I want to do. It's about that I hope I can help everybody. And I think that I wake up 5 a.m. to try and really think hard about what I want to put in those videos. And I'm super happy that we have a nice bunch of community members that are watching them every day. It means a lot to me when somebody tells me that they watch them every morning, because that means that I'm helping. And that's really the biggest thing that I want to do. So I guess the first thing I want to talk about is the question that was asked about mindset and breaking bad habits and that kind of stuff. I will tell you this straight up, that breaking bad habits is easier when you admit what doesn't work. That, you know what, I don't do anything normal. So I'm going to come over to the screen and I'm going to pull it up on the screen so that we can just have like a normal conversation. And then when we go over to some slides and whatnot, I'll put it back over on the, on the screen. So I'm going to pull up a video. I'm going to show myself here, and this is what I look like in the afternoon. Got my Star Wars shirt on, nice and relaxed in the afternoon. So the reason I'm coming on the video is because I want to get really clear on the question that was posed before about mindset. And if I guess raise your hand or just say yes if you've ever been in a trade, be like, oh gosh, I feel like every trade I put on is a losing trade, and then you start to spiral into this thing where you just start to believe like, I'm the one who's not making money. Why did that trade not make money? Why did that trade not make money? Right? We've all been there, right? So here's immediately like the biggest thing. Like we talk about order flow, we talk about tape reading, we talk about putting a trade on. And if we go all the way back to like the very beginning of why we all decided to risk money and why we decided to like think that we have the ability to get in there and make money, it's because we believe we have an edge. So getting right into the thought process. Oh, you like our new Stock Trading Pro hats, by the way? Kind of cool, right? we just got them the other day. I'm in love with them right now. Is if you think about it, if you put on a trade, I put on a trade, we believe that over time, probabilities is how we're going to make money. So that really means that right off the bat, it means that it doesn't mean every trade is going to make money. It means that most of the trades we're going to make are going to make money, which also means that some of them aren't going to make money. So when you start to think that way immediately, your number one job, my job, your job, everybody's job is to say, first, I have to find an edge. And the edge that we use in the boot camp, the edge that all of our members use is order flow. And really what order flow is, we're looking for when the smart money is doing something obvious. So let's just leave it at kind of like a high level like that. So let's just say we have an edge. So I put on a trade, or somebody in the community puts on a trade, the perfect language, the perfect thought process when you're putting on that trade. And again, we're solving the problem of how do I stop feeling like, oh my gosh, I'm the only person who has a losing trade. So we want to eliminate that right off the bat. We're going to be like, bam, no more am I going to be like, oh gosh, I have losing trades. I'm the only one who has losing trades. If you put on a trade that doesn't make money, the right way to do it, and you want to write it down like on a Post-it pad or a notepad or whatever it happens to be, if you make a good trade, you want to say this: if I put on the trade, it's either going to follow through or it's not, because you did the hard work prior to the trade by having an edge in the first place. So remember, edge means most of the time you're going to make money. So think about that. So if you put on a trade, and again, I use this example at the last training event that we did. How many times have we put on a trade where and I'll just use, for example, as if we happen to be day trading, where let's say you put on a trade at 10 o'clock in the morning and it went up and it paused and you have the perfect setup and I love it. And you put the trade on and it goes, boop, slowly goes down, right? Half hour later, that same exact trade happens, goes up, pauses sideways, you put the trade on and it goes like this, it goes straight up. The same exact trade. So what we're going to talk about right now is we're going to rock your world so you never, ever have that negative mindset anymore. You put the trade on, same exact trade. One works out perfectly, one doesn't work out. That's odds. That's the point. The odds are it's going to work out. Sometimes it does, sometimes it doesn't. So if you want to start to think like a pro, which we talk all the time in the boot camp, we say hashtag act like a pro, hashtag trade like a pro. That means that we are working the probabilities. It's our job before the market opens, which we have our game plan meetings every single day at 8:45 to go over the best ideas for that day. It's our job to find the best ideas. Then when the market opens, we simply sit back and we say, okay, I want to buy those stocks. And all I'm doing now is looking for the best time to buy it into those ideas. We're not scanning all over the place. We're not looking for new ideas. Like, that's your money makers today. That's your treasure map for the day, for the week, for the month. But think about this. If we can all admit two different trades look exactly the same, one worked, one didn't, that means we can't do anything about the outcome. So if you immediately, and Darren, I'm super happy you brought this up at the beginning, because the mindset is everything. And it's not discipline. It's not like this superhuman ability that you don't think you have. It's really just a way to think. If you know going into your trade saying, if I do everything I'm supposed to, I can't do anything about the outcome. My biggest job is keeping the losses manageable and learning how to hold the winners. That's what trading's about. So I promise you, and especially if we work together, the number one job first is understanding what great trades look like. Number two is understanding how to manage risk. And I'll get into that in a second, which is kind of fun. And then the third part is when you're around long enough, you understand how and when to hold the winning trades longer. Now, what's funny about the risk part is that there's kind of like this mistaken rule that I have no idea where it came from. But like, let's say you put on a trade and you're like, okay, I'm going to risk $500 on this trade. And you put the trade on and you're like, okay, there's my stop loss. When it goes down there, I'm going to lose $500. I just want to blow this out of the water. Let's get it off the table so I can help you save money right now before you place your next trade. If you love the idea, and I'll just use round numbers, again, just to keep it safe, simple, actually. Let's say you have 500 shares and beautiful idea, working out perfectly. Everything looks great, starts to move slowly against you, and now you're down $100, you're down $200, you're down $300. And it's slowly moving against you, but the idea still looks perfect. Maybe, again, say yes if you've had like that one candle that takes you out of a trade and then does exactly what you wanted to do, right? I have, right? You put on the trade, boom, one candle takes you out, and then all of a sudden the thing just starts like going like this, exactly what you thought it was going to do. Happened to me more times than I can count, right? So let's fix that right now as well. So here's the deal. There's no written rule that says if you said you're going to lose X amount of money and you're going to wait till it gets all the way down there and you're going to take all the money and lose all of it, there's no rule that says that. If a trade starts moving against you, but you still love it, scale out. Get out of some of it. Lower your risk exposure. Get your head back on straight so you're not watching every uptick, downtick, uptick, downtick, uptick, which we all do, right? Scale your risk back. You still have some of that share size in your position. So let's say you go from 500 to 200. Now it's still in your position summary. You're still watching the trade. Your loss exposure is lowered now. And if it continues to go down, big deal. You take a loss on the smaller piece now. But if it doesn't, and maybe it was just that one candle that we all know, it goes boom, and then all of a sudden it slowly starts doing exactly what we want. As soon as you take those shares off, so let's say you go from 500, you remove 300. It's moving against you. I'm just not loving it, right? And it starts to slowly move back up. Learn in your software how to set an alert right back up there where you got in the first time so that you can start trading other stuff, looking around, managing that position. And when that alert triggers, you're like, oh, it got back up to where I want. Maybe now I'll put those shares back on. And why is this different? Because now you have confirmation it's moving in your favor. So think about what we just talked about. You're lowering your risk on positions that aren't working, but not getting out of them because the reason you're in it in the first place is because it was a good idea. So remember, job number one, always think in probabilities. We have no idea which trade's going to follow through, which immediately takes all the pressure off of why am I losing on these trades? Why? Assuming you have a good idea, which again, that's what we talk about together, right? Stop beating yourself up if a good idea doesn't make money. Be nice to yourself. Be a pro. A pro is like, okay, didn't follow through. Look for the next one. Okay, that did follow through. Look for the next one. Okay, next trade. Didn't go anywhere. Okay, I'll take small loss. Look for the next one. That's what being a pro is. It's our job. Our job is before the market even opens. After the market opens, then we're just managing risk and leverage. And should I scale out? Should I add to the position? Should I book a profit? At what point do I book a profit? And actually, Sharon asked a question tonight about profit targets and that kind of stuff. So I promise you, if you immediately tomorrow start to think about trading from, I have no idea which one's going to follow through and which one's going to go lower. All I do know is if I do a good job of setting up my trades, I'm in a really good position to make money month after month after month. So keep that in mind. Be nice to yourself. It's about odds. It's about probabilities. It's about going to the next trade. It's about doing what you're supposed to do. Okay. I just want to go through some of the questions, and I'm going to come off the screen because now we're going to go back over to the PowerPoint. So I'm going to go over some of the questions. So let's see. I'm going to scroll back up and take a look. I want to make sure that I answer everybody because you guys and everybody took the time tonight to be here. So I want to make sure that I want to cover as many as I can. Let's see. Okay, so Alan Horton, what is the rule of thumb for placing stop loss orders? Is it true that market makers can see where you place them? Okay. This is you know what? I'm going to stay on the screen because I want to speak directly. I want to speak directly to everybody. Okay. And again, this is more mindset stuff. When the market's active, when the market's trading well, meaning there's volume, there's volatility, there's something going on, whether it's earnings or news or breakout or stuff like that, market makers don't give a crap about your orders. And that's the most curse word you'll hear from me tonight. So I had to emphasize it a little bit there. They don't care. Market makers and specialists, algorithms, they don't care. They're more concerned with making money for themselves and preserving their capital. The only time, and again, I'm putting this in such a tiny perspective, the only time to be aware of, maybe in the back of your mind, you're thinking about, well, the stop loss got hit by the market maker or my stop loss got hit by the specialist. In those circumstances, you probably shouldn't be trading in the first place. And I'm talking about very light volume, trendless situations where you see it like the SPY today. We're just going back and forth, back and forth, back and forth, back and forth, where you're probably buying the high, it goes down, you're shorting the low, and it keeps. When you're trading in a market that is not obvious, there's no order flow and there's no volume, those are the worst times to trade because look, if there's stop loss, if there's 1,000 stop losses and everybody in the world is looking at that same low, you bet your bottom dollar it's going to somehow just tick that out by 2 cents and trigger all the stop losses. But first of all, your stop loss should not be that close. It should be at a price, to answer Alan's question in a little more detail, it should be at a price that's outside of the price action. You don't want to get hit. And here's a rule of thumb, and you probably want to write this down, which is important. Your stop loss should be outside of normal price action. That means that the price got outside of the noise. You never want your stop loss to be in the noise. So again, just for tonight, keeping it very high level because we have stuff that we teach in the boot camp that I don't want to get into too much detail because that's what the boot camp is for. Yesterday's high and low, whether you're day trading, swing trading, those are the first primary levels, especially as a swing trader, where your stop loss should be out of that loop. You don't want to have a stop loss inside of yesterday's trading because it's nothing changed, right? Where are you stopping it from? You're just picking a random level. Now, even if it's outside of yesterday's range, it can't be right there. It has to be at a level that, okay, if this number is 50, for argument's sake, it's got to be somewhere down here, like 49.25 or something like that. It's got to be outside of the noise. That's where to place the proper stop loss. Remember the reason for a stop loss. A stop loss should be used because the circumstances after you entered changed. That's it. So you need to identify a spot to say, okay, if it trades down there, the trade's probably not valid anymore. I'm okay with risking a certain amount down to there. And if it fluctuates back and forth, but doesn't stop me out and then keeps going, then I did a good job of accepting the right amount of risk in exchange for the potential profit, which that's a big point here too. A lot of people focus on the stop loss, which, as Alan said, you absolutely should. However, a big part of trading that is not talked about enough is what are the odds of your profit target being hit versus your stop loss. That's where order flow comes in. That's where understanding, which we're going to talk about tonight, well bid and well offered, and what are the odds of it going through. That's a big part of trading. So it's funny when people pick risk reward numbers. They're like, I want to trade 3-to-1 risk reward. Yeah, that's awesome. But what are the odds of you hitting 3? That's what separates somebody who's a struggling chart reader from somebody who understands how to read the tape. When you understand how to read the tape, you're building an argument. You say, I want to buy because of this, because of this, because of this, because of this, because of this. And now you type that into our Slack community, like, that's an argument. That's a good reason to be in a trade. So, Alan, the rule of thumb for a stop loss is outside of the noise. So in other words, like the random fluctuation on whatever time frame you happen to be watching, whether it's 5 minutes or 5 weeks, it's got to be outside the noise. Then you have to trade the right amount of share size to allow it to fluctuate for the dollar amount that you're okay with risking. So good question. Good. We haven't even got into the slide yet. Good questions. And I think I just got a mosquito bite. Okay, so yeah, so I just want to make sure I reiterate that. Don't worry about the market makers and the specialists. Don't get that out of your head, because you're going to start to think like they're out to get me. I know they know. You know, I used to think that when I first started trading, and it's a complete mindset. You just want to get out of your head. You just want to say, I'm going to make good trades, and if I find good trades, they should follow through. So, Alan, get that out of your head, and it'll clear it up for you. Okay. Let's see. I want to make sure I go through everyone's questions. Let's see, Lynn. What do you think about selling covered calls on a stock you believe in but moved against you? So, Lynn, with and respect to everybody, I want to keep this tonight about stock trading. I don't want to talk about options tonight. This is a free training event, and I just want to talk about stock trading. So I hope you can appreciate that. Okay. I don't want to get into strike price, expiration, volatility, premium, implied volatility, historical volatility. I don't want to talk about that tonight because we're stock trading pro, and I want to talk about stock trading, and I hope you can appreciate that. Okay. Let's see, Chris Lopman. Sure, but back where you left off doesn't seem to have any confirmation, and then where to set that new stop right below where you entered. No, Chris, that's not what we're saying at all, quite honestly. So don't take what I said out of context, please. If you take a loss and you scale out of a position, I said only consider to set an alert at the area you got back in, and think about what's happening. The idea didn't change. The order flow hasn't changed. We still like the idea. We're putting the trade back on if it gets feedback from the market and moves back in our favor. So it's very important not to take a piece of what I said and put it out of context, okay? So let's see, what prompts the decision to move a day trade to a swing trade? That's a great question. And I'm going to answer it in a way that you probably don't expect. And I'm sorry, I can't see the full name in there. You don't decide that after the trade. You need to know that before the trade. So everybody, please write this down. You should know before the market opens if a stock is a day trade candidate or a swing trade candidate. Before the market opens. It's not a decision you make after the fact. It needs to be a decision based on, number one, how far has the stock moved already? So in other words, if this is the profit potential and it's already moved 3 or 4 days, there's very little potential left in the trade based on a normal target for that stock. So again, if this is the normal trade and it's already gone 3 days, that's not going to be a swing trade potential because it's reduced profit potential. That would make it a day trade before the market opens. So that's a very important distinction. You shouldn't, let me reword it a different way. If you don't know if it's a swing trade prior to the day opening, you didn't do enough game planning. And that's really where our game plan meeting is really powerful because, and again, you can ask anybody who's on the call right now when we discuss stocks for day trade versus swing trades. We clearly say 8:45 in the morning, this is a day trade because, day trade only because, and think about it, there were charts recently of Snap, and we could take a look in a minute, and CAR, C-A-R, where they were going higher, going higher, going higher. And we say, wow, this is still super bullish, still like it as a buy, but we're not looking to swing trade these stocks because the odds of follow through over the next 3 to 5 days have diminished dramatically. Again, if this is the normal profit target and now it's 3 to 5 days later, you don't have the same reward potential for the risk that you have to take. So that's a really good question about swing trading. Let's see. I didn't see a question about tick charts. If you can post that in there again, I'm only seeing the second question. Let's see, Chris, when you talk about yesterday's range, does that include after hours trades? No, absolutely not. That's a good question as well. I'm aware of pre-market levels, but when I'm talking about average true range, I'm only talking about regular trading hours. And I want to say this, I don't know anybody's experience who's on the call right now, but I want to get this very clear. Trading after hours is completely different from trading normal trading hours. I don't recommend anybody who doesn't have a consistent profitable track record. And again, very broad statement. So please put it in context. After hours trading, whether it's pre-market or after hours, is very different from normal trading hours. Unless you have a track record, unless you're very experienced, I'd recommend you stick to within 9:30 to 4. Very, very important. Okay. So let's see. So again, Chris, I want to be clear. You've asked a few questions. I want to make sure I get to all your questions. I'm aware of pre-market levels, but I don't trade around them unless massive volume traded pre-market, especially if it happened to be earnings or a big number. So for example, the futures are a big thing to watch after hours. You want to know what was the high or the low of the futures. And I'm still mostly going to trade around yesterday's high and low and the last week and the last month. But the pre-market levels only matter to me if there's significant volume. So again, Chris, very good question there. Excellent question, actually. So let's see. Moving on to the next one. Mark Van Patten. Hey, buddy. How's it going? How do you have your moving average set up on TradingView charts? What happened to you today? It was up 7 and then crashed. How do you know which one to stay up and which ones are going up and reverse? Well, a lot of that happens with volume. You'll see volume spikes when we get reversals. You typically see what we call a bearish U-turn. So if a stock is going higher and you get a bearish U-turn, it means it traded through the previous level, came back and reversed. But there's actually a very simple way that we teach. And I've taught this in quite a few YouTube videos. Now, first off, to put Mark's question in context, when a stock is going up and crashes, nobody can predict that. So let's just be clear. Like I'm a normal person like you. If a stock is strong and then all of a sudden the bed just falls out of it, there's nobody that can predict that. That's just one of those things. However, using 2 moving averages and candlestick charts is by far the easiest way to have structure to manage trades that are both profitable and, quite honestly, entering new trades. And let me actually pull up on the screen. I'm going to pull up my TradingView charts and I'll answer that question directly. So let me pull that up and I'll bring it over. So we're actually going to use, let me take a look at, oh, okay, I see what you're talking about. Let me, I'm going to share the screen and we'll take a look at the setup right now. Let me just make sure it's on the screen correctly. Okay. So what I want you to do, I'm going to actually walk you through this right now so that you could write it down. And this is the stock that we're talking about today. So you can clearly see here, here's the 27th, which is today's price action, and here's the rally. So just so we're clear, we have a 10 period and a 20 period simple moving average on the chart here. So in the context of Mark's question, we're going to use these 2 moving averages and the candlestick charts to exit this winning trade. So here's what I want you to write down, okay? When the candlestick, so again, we have the 10 simple period moving average, and we have the 20 period simple moving average. And on this, in this case here, we're using the 5-minute chart, which is a normal day trading time frame. So here's the exit signals. So let's assume you have a profitable trade as it's moving in your favor. The first exit is when price crosses the other side of the 20 period moving average and closes there. So I'm going to zoom this out so we're all looking at the same exact thing. So you see this candle right here? This candle closed on the other side of the 20 period moving average, which you can see from here all the way up to here, all the way up till looks like around 12:45. That was the first exit, 12:35. Okay, so when price crosses the opposite side of the 20 period moving average, that's exit number 1. Exit number 2 is when the 10 period moving average does the same thing and crosses over. So that's roughly 20 minutes later that you would have exited the balance. So you would have been out of the whole thing all the way up here, and you would have not been sitting through all of this. So what I'm going to do now is I'm going to come back to the screen. Does everybody understand that? So you have 2 moving averages for a profitable trade, moves in your favor. The first exit is when price on your entry time frame, that's important too, price on your entry time frame crosses and closes below the 20 period moving average. Then if the 10 period moving average also rolls over and crosses in this case below the 20, that would be exit number two. I'll tell you the reason why this is loved and easy to follow, because there's no subjectivity to it. You're not like, oh, should I get out? Should I hang on? It's none of that. It's price closes below, you're out. First piece. Moving average closes below, second piece. Then you look for entries back in the same direction of however you decided that higher time frame. So Mark, thank you for using this chart because it did crash, but two very, very clean exits based on the strategy that I just went over. Okay, so very, very good question. Very good question. So let's see, William, is NEO a good working order today as an example, and tomorrow we could look for an entry? So let's actually take a look at NEO. We'll go back to the charts, and we're actually going to take, we're going to go back to my normal charts. We'll leave that one there. So let's see, we're going to head over to the NEO on multiple time frames. So first we're going to get into NEO, and we're going to discuss the possibility of trading NEO. So those of you that are not in the boot camp, who weren't enjoying this price action for the last few months, NEO was upgraded over here by JP Morgan. We got involved here, had a really nice 3-day push in the stock, and then it paused. And today was a really good day. So I want to make this clear. So the question is in the context of, is it too late to get involved? Now, this is actually a question we're going to address later, which is what is well bid versus well offered. So well bid means your stock on any time frame has a higher high and a higher low. So in this case, in NEO, here's the higher high, here's the higher low. So in that case, this is the first day the stock is well bid. So tomorrow, I personally would be looking to buy at yesterday's high, which is today, and the stop loss would be down here. So now you have to say to yourself, am I willing to risk $3.50 on a trade in NEO in exchange for what was a $40 price target? That's a big stop loss. I'm not sure that personally I'd be willing to risk $3.50 in a stock that traded in a $3 trading range for 9 days. So you probably have to work the order a little bit. So I believe that was William that asked the question. Let me just pull up the chat again so I can be sure. Yeah, so for those of you that are not in the boot camp, I want to discuss this very clearly. So you know how I just said that it expanded $3.50 or pretty close to it, right? Basically 26 to 28.5, so $2.50, almost $3, right? That's a big move. So that's going to be your stop loss if you want to hold the trade. The proper stop loss, like was asked before, what is the proper stop? So it's got to be outside of that noise. It has to be in the time frame that you're trading it. So in this case, if you're willing to look for a new trade, how I would do it is I would not be going in with my full share size because of the size of today's candlestick, but I love the idea based on the higher time frames, the order flow, and the profit target. So this is a big advanced concept that's super important to understand. You can love an idea, but that doesn't mean you need to go in with all of your share size, because remember what I said before about here's the profit target, and if you start getting involved late, it decreases your profit potential, and the decrease turns that into a lower reward to risk ratio, right? So you can still get involved in this trade, but because it's a little bit after a $3 move, a $2.50 move, you would lower your share size on the initial entry, as William said, which we call working the order, and then you would work and add share size as you get feedback from the market as it moves in your favor. Okay, very good question. Very good question. Let's see, Christopher Albert, what is your opinion on the best platform for beginners? Well, that really depends. Look, I'm very careful not to discuss platforms because I never want to be held responsible for a trade. I can tell you that I use TradeStation. Most of the members, if not quite a large group of the members in the community, use TD Ameritrade, Thinkorswim, which becoming Charles Schwab. Thinkorswim is a very popular platform. So there's Interactive Traders, there's TradeStation, and there's, Thinkorswim, which a lot of people use. For charts, I will say this, the charting platform that I show on the screen is called TradingView. It's super simplistic, super easy to set up, and very affordable. And it's very clean charts too. It's very easy to set up. I think I have the Pro Plus package, which allows you to put up 4 charts at the same time. And I think it's $300 something for the entire year. So it's very, very affordable. The one thing you have to make sure you do when you're setting up the charts is make sure that you have real-time data. That's important too, or the charts are going to look different. So you have to, I think it's like $2 per month for New York Stock Exchange, NASDAQ, and if you want the CME futures. Okay, Greg Davis is saying Tastyworks is excellent for trading too, and TradingView for charting. Thank you, Greg. Appreciate it. So yeah, it's one of those things, kind of like breaking in a baseball glove. You know, you eventually got to get to one that you're comfortable with. But like I said, many of the people in the boot camp are using Thinkorswim. I was using E-Trade, and I just recently switched over in the last couple of months over to TradeStation. So Interactive Brokers is also pretty good. Stick with the ones that are popular. That again, advice is within context, right? You don't want to mess around when it comes to your money. And in the context of platforms, you don't want to be the guinea pig for a new company that's just coming out. The biggest advice that I would give you is go with the company that's been around for a while, because they worked out all the bugs. And the ones that I just mentioned, they're pretty popular, and they're popular for a reason, because they're taking care of their customers. Okay. Lynn, honestly, Lynn, I hope to see you in the boot camp. I hope, again, everybody who's in the boot camp now, who's with us tonight, this is the kind of stuff that we go over every day in a lot of detail. And when I tell you, popular question that we get is, do you give us the entries and exits? And yes, I literally walk you through every single trade that I'm calling out during the day. So on average, I'll call out anywhere from 20 to 30 trades per day. We discuss all these trades before the market opens, but here's the big thing that is incredibly important. If I'm calling out trades that meet the criteria, that meet the strategy, that meet the risk reward, then it's up to you, based on your resources, your goals, your skills, your education, all of that kind of stuff, to decide which of those trades are perfect for you. And then once you're in a trade that I called out, you just tell me, hey, Pete, I'm in NEO. How are we managing it? That's all it takes. You just have to tell me which trade you took, and then we have a conversation about it. Because it's impossible for me to know which trade everybody took. All you got to do is type a quick message into me, say, hey, Pete, I'm long XYZ. How are we managing it? Should I be adding here? What's the next level I should be looking at? That's all it takes. So you'll get exact management from me. You just got to let me know which of those trades that you took. That's all it takes. That's all it takes. So let's see. Harold Hall. How do you set the profit target? Does it require you must know your stop loss? So the profit target and the stop loss, while they're important to setting risk reward, what's really more important is really understanding follow through. So in other words, you really, before you put the trade on, and I guess if you're day trading right now, you really understand the comment I'm about to make, which is in the afternoon, the volume and the volatility, especially lately, has dropped off dramatically. So there hasn't been as many active trades in the afternoon, because the expectation for following through has been much lower. But let's use general terms here. If you happen to not be in the boot camp, and I know we talk about this quite a bit, for day trading profit targets, the first thing that we take a look at is the average true range of the stock. And I'll give you a very quick, I'm going to pull it up on my screen again. And again, I like to show software that anybody can use. So I'm going to pull this up on my screen again. Let's see. I'm sorry, let me, I want to pull up the screen and here. So let me know if you can see that on the screen. I just want to make sure. Just want to make sure you can see what I have up on the screen here. Okay. So let's talk about Apple just as an example. Okay, so we're going to type in Apple into FinViz. So what we're going to do on the lower right-hand corner over here, we're going to look at what's called ATR. And ATR, and matter of fact, if you can see that, it says average true range. That's what it stands for. And 14. The 14 means on most softwares, that means it goes back 14 periods. So for a daily chart, that means 14 daily candlesticks. For a 5-minute chart, that means 14 5-minute candles. And what that does is it measures the average from the low to the high over 14 periods. So it gives you the average of how much the stock does from low to high on average. So in reference to the question, this is the first profit target that we use as day traders. So you can see here, Apple has an average true range, or an ATR, of 3.68. So let's say, for argument's sake, Apple, and I'm going to come off the screen again for a second because I'm Italian. I like to use my hands. So let's say this is the low in Apple, and we know the average true range in Apple is $3.68, and it's starting to go up, and you get entries, and it goes a push and a pause and a push and a pause, right? So $3.68 from the low, you can project the first target as a day trade because that's what the stock normally does. And the beauty of this is we're not guessing. That's literally what the stock normally does. So we're just letting it tell us where it's going to based on how it normally trades. Now, here's a big thing. That's what it normally does. That doesn't mean that's all it will do. So let's say Apple, and I'll just use round numbers to keep it simple. Let's say Apple's low today is 120, and now it goes up to 123.50. So now it's gone up $3.50, and it normally moves $3.68. So now your alarm should be going off. Be like, okay, I know my stock. I know Apple. I have my alert set. It's almost at the average true range of what it normally does. So what you'll hear me talking about in the room during the day. Now, again, there's more to it because you have to learn how to read the tape. Remember, your goal is to go from chart reader to tape reader, which means you understand how to build an argument. So I'm going to give you an argument here. An argument is basically, okay, what's happening? Are the market internals supporting the stock continuing to go higher? Are the market indices supporting? Is the sector and the group supporting buying? Or is nothing on the same page? And is that all you can reasonably expect? So all of those kind of things, we teach you how to build that argument for the trade. Then once it starts to get up towards the average true range, that's when you'll hear me saying, okay, Harold, you're in that trade. Let's start to move up a trailing stop loss because it's starting to get a little overheated or it's getting up towards the ATR. It doesn't mean you bail out. So what it does is you start to move up your trailing stop as it keeps moving in your favor and in your favor and in your favor. And you eventually get to the point where this is what I promise you. Within 30 days of us working together, the biggest problem is learning how to hold good trades longer. And that's an awesome problem to have, right? But that means that you learned how to identify good ideas. So when that happens, then we start to talk about trailing stop losses. There's a trailing stop loss based on the dollar amount you want to keep. There's a dollar amount based on I'm only going to let it pull back 50 cents. There's a percentage. I'm going to let it pull back 1%, and that'll take me out. But the one thing you don't want to do is cut your profit short. You want to learn to read the tape. You want to learn to be a tape reader and say, everything's great here. I'm going to keep letting this thing move in my favor until I see the tape change. So that's the way to do it for day trades. So you have average true range, knowing your stock from low to high, and then you start to move up your trailing stop as it moves in your favor. On swing trades, a little bit different. Swing trades, you're not so necessarily using the average true range, although you could, but here's the super simple secret. Don't tell anybody. Look to the left, and if you know your stock, which you should not be trading a stock that you don't know. You need to watch it for a day or two, maybe even a week, and get a feel for how it trades, right? Look to the left and say, what, and let's keep it easy. Let's look on the buy side, right? What does this stock normally do when it rallies? So look to and find at least two different rallies. So, okay, I look to the left and the stock normally goes up from 20 to 32. So that was $12. And then the next one, you say, okay, this one went from 33 to 41. Okay, that was $8. So somewhere between $8 and $10, for argument's sake, that's where I could reasonably expect my swing trade to go to. So that's how we're going to set our profit targets. Now, how do you set the profit target and know where to get out? Well, you have to say, now the trade that you're looking at is where did that trade start and how far into the $10 move has it already gone? Remember what I said before. We said if this is the normal profit target, the later you start to get into the trade, you're shrinking your profit potential, taking break-even trades, and that makes you a break-even trader. Think about that. Before you even put the trade on, you should have the reward potential, right? So when you look to the left, you'd be like, oh, it's only gone $2. I still have $8. But if you look to the right and all of a sudden you'd be like, well, it's gone $6. It normally moves 10. The stock's on fire, but I'm not setting up a good trade for myself. Do you understand how success is on you? It's really just thinking it through. And again, that's what we specialize in, thinking it through. Yeah, it's a great idea. That might be a day trade like we talked about in Snap and Car the last couple of days, heading into the sell-off that we just recently had. Might be a good buy as a day trade. Snap had an amazing day on Friday, but not necessarily a swing trade because you're buying it too late into what it normally does. So Harold, good question there. Very, very good question. Okay. Um, okay. Again, we're gonna stay away from making stock picks today. I just want today to be about strategy, tactics, and mindset. I hope everybody can appreciate that. Okay, so what we're going to do now is I'm going to go into the PowerPoint. We're going to answer some of the questions that were submitted prior to. And by the way, I hope everybody is in one of the forums that we have, the Top Trading Pros community, as well as obviously if you're in the boot camp, you're behind the curtain in the Stock Trading Pro community. So a question from Therese and Elizabeth. They both had the same question. I'm new and working my way through the material. I think I understand well bid and well offered and can recognize an inside candlestick right now. So that's great. So both of them are saying, I understand how to start putting the pieces together for an argument, but I'm really having a hard time knowing when to enter the trade and where to place the stop. So again, we mentioned this very briefly before. If candles are well bid, which we described before, means higher high and higher low, you're using that candle, the one on the right that says now it's well bid. It made a higher high, a higher low. The high of that candle is your next entry. The stop loss is that same candle. If you're trading an inside candlestick, the same criteria. And gosh, I love inside candlesticks because they give such a defined entry signal and a super tight loss if it goes against you. But if it moves in your favor, those usually work pretty quickly. So really, to keep it simple, whatever time frame you're looking at, wherever you got the entry signal, that candlestick itself is the entry in the direction that you're looking to trade, whether it's a buy or a sell short. Okay. All right. So hopefully we got that. And by the way, Teresa and Elizabeth, you're both in the boot camp. If you want a little bit more examples on that, just let me know. I'll be more than happy to. So Andrew has some really good picks in the game plan the last couple of weeks. When you're setting up swing trades like an inside candle, are you placing the buy stops before the market opens or looking for an entry after the open? So again, very clearly, remember what I said way back at the beginning of today's coaching call? The hard work is before the market opens. So if you're looking for a swing trade, whether it's a breakout, whether it's a well-bid candlestick, whether it's an inside candlestick, you're looking for the entry, you should have your entry price prior to the market open. So we can talk about a trade like JKS today, and I'll go over to the screen really quickly. Or slowly. I don't know why I said really quickly. And I'll show you that chart so we can use a example right out of today. So this would be kind of cool that we can go right over to a chart that we've been trading. So JKS and the solars have been very strong. And we're going to focus here specifically on the daily chart and this candle coming into today. So today we were planning to be a buyer in the stock. We were looking for it to retrace and start a new trend higher. And the entry was this. This is the inside candlestick that Therese and Elizabeth were just talking about. So the entry going into the day today, Andrew, was to buy at the high of this candlestick. But if you'll notice, and I'll zoom this out a little bit, today's price action never broke the previous day's high, so we never got into the trade. So the trade and the stock moved lower, but we did not have a losing trade because what did we say all day in the game plan, all day during the meeting, during the day today as the market was unfolding? Stay focused. Hashtag trade like a pro. We would have not gotten into this trade because we knew before the market opened, it has to break yesterday's high. And if we want to be a little more conservative, we let the day end well bid and then look for a new entry after it goes well bid. Okay. Let's see. Gary has a question. Are the entries the same for swing trades versus day trades? Yes. That's actually something interesting. When new people come into the boot camp and we cover the entries and exits, we got a whole training on that as soon as you get in there. They're not complicated. You just have to see repetition. So like when I'm calling out the trades during the day, I'm saying, here's the signal, here's the time frame, here's the signal. But you should already know that the entry, if I call out an in5 Walmart, just for example, if I call it an in5 out in Walmart, that you should be able to look at the chart in a heartbeat and know whether it's a buy or a sell, clearly, right? And then the entry is the high of that inside candle, the same way on the daily candlestick that we're looking for the high. Now, I want to make this clear, and this is why I say all the time we need to have time together, right? Having the entry is not everything. It's not, because you still need to understand what happens between entry and exit. All of those pieces that go into building the argument are the internals on the right. What are the ticks doing? What is the VIX doing? All of those kind of things. What are the indices doing? What are the stocks? All of that goes in. I call it B, between entry and exit. That's where the magic happens. That's where you really learn to be a trader. So yes, answering the question, day trade and swing trading signals are the same, but as we just described, the trade management is really where the skill is, and that's the fun, quite honestly. So let's see, Benjamin, can you show how to put a stop loss in when you place the trade? Well, the stop loss in whether it's a well bid candlestick or whether it's an inside candlestick. So if it's an inside candlestick, it's below that low. It's below there. If it's a well bid candlestick, it's below the candle that's on the right, which is the well bid candlestick. So, and again, remember all the way back at the beginning of today's call, it can't be right at that low. It's got to be outside of that so you don't get hit. If you do get hit, that means you should be stopped out. If the low is $20, you can't put the stop loss at 1998. It's got to be like maybe at 1980 or something like that, down in that area. Okay, so I want to make sure I get through everybody's questions who took the time to post them in there. I just want to show complete respect to everybody. So Andrew, in regards to this, I typically will place a buy stop after the market opens. I don't like to place buy stops pre-market for all the reasons that we said before because of liquidity. I don't want to get a really bad fill. You could use a buy stop limit order, but if I'm using a stop order to get into a trade, it's after the market opens. So good question. Wow, I'm getting a sore throat already. Sharon asking how you find the target price. So hopefully, Sharon, we gave two very different ways of finding the target price, both for day trades and for swing trades. So hopefully we covered that in enough detail for you. And I believe we have one more question here from Michael. Actually, three questions. First one is, do you have a recommended template for a trading journal? And actually, I do. I'll pull that up on the screen in a second. For platforms that offer it, is trading fractional shares of stock okay or not okay? This comes down to well, first off, I want to say something without slamming anybody. I want to be clear. You should not be actively trading on Robinhood. I'm so against I'm not a really positive person, but Robinhood is not meant to make a living. Robinhood is not meant to be an active trading platform. Robinhood is meant to trade on your phone, have fun, trade 5 shares of stock and be involved in the market. If you want to take this seriously, please open a brokerage account with a broker where you're you're actually trading on your laptop or your computer. And if you really want to do this for a living, or even not for a living, if you just want to take it seriously, trade with a actual broker that is E-Trade, Schwab, like all the ones that we rattled off before. And the reason I bring that up is because fractional shares has become incredibly popular because of Robinhood. Is trading fraction of the shares okay or not? Look, I mean, it's really a preference. I will say this, and I say this as your friend, Michael and everybody else. You know what? I'm actually going to answer Michael's last question, then I can come back to the screen. In your videos, you often say an idea is good for a swing trade or a day trade. Is that based on the price action or something else? So in this case, as I mentioned before, the difference between a day trade and a swing trade is how far has the stock already moved. So we're going to actually anticipate prior to the market opening. We're going to say that, okay, it's definitely a buy, but it's not a buy as a swing trade now because now the stock has already gone 5 days in a row. So Michael, in reference to that last part, day trade versus swing trade is how much room do we reasonably have in the trade? Can we expect it to continue to go? That's a big part of day trade versus swing trade. And I know it was brought up before, the difference and management and that kind of stuff. So you need to know that before the market opens. I want to get back to the part about fractional shares. And I'm going to actually change the question just a little bit, Michael. I don't care how big your account is. I don't care if you have $1 million in your account. And I say this in all sincerity, as somebody who managed traders for a long time, had 2 trading firms, please do not trade big share size until you prove you could make money. I'm saying that as your friend right now. Just because you could risk a lot more because you made it owning a deli, a pizzeria, a restaurant, working at Honeywell, it doesn't make a difference. Everybody has a learning curve. There's no reason for your learning curve to be expensive just because you can afford to risk more. Keep your share size down while you're learning. And then when you get confidence, then when you see you're on the right side of a lot of trades, as you start to learn to manage risk, as you start to see a positive P&L, I'm telling you as your friend, that's when you should start to increase your share size, whether you can afford to or not, because you've proven that you understand how to manage risk and find good ideas. So I'm just saying that as a friend. I'll take off my other hat, and I'm saying that as a friend. Keep your share size down while you're still learning. It's very, very important. Somebody just messaged me for the link again to find out more about the boot camp. So I'm actually just going to put that in here. And if you want to learn about that, I would love for you to make the decision to join us. And if you didn't see it before, I'm going to put this in here as well, because this matters to me. This is something special to me, of people that are in the boot camp and how people are doing. Okay. Oh, great. Michael, you're here. Awesome. Awesome. Thank you. Let's see. Can you do a visual on what you were explaining with the entry on an inside candle? I think people are trying to figure that out and need a visual walkthrough. This is where you would enter on a 5-minute. Okay, so we'll go over that. If you could do me a favor, if you're interested in see how other traders are doing, just click on any one of those links. Okay, so what we're going to do is I'm going to pull up, let me share the screen, and I'm going to pull up what I normally trade on. So I'll show you the exact screen. So again, if you're in TradingView, typically during the day, I'm going to have this set up on my screen. So this top left-hand chart is usually my weekly chart. This one's my daily chart. This one would be my hourly chart. And then this bottom right-hand corner is either the 5 or the 15, but let's use 5-minute as an example. So what we will do is, let me sort this by stocks that were up for the day. That'll be a little bit easier, right? So let's see. Okay, so we got a good example here. Actually, this is actually really good. So I'm going to zoom this out. I'm going to remove the watermark so you can see the charts really clear. So this is SE, right? So we're looking at a 5-minute chart of SE, and you can see from the higher time frames, it's green everywhere, right? We're not going to get into the details of order flow right now. But what I want you to focus on is this right here. Okay, so this candle is an inside candle on the 5-minute chart, because this candle is completely inside the previous candle. So like I said, the next candle, when it trades above that, and the high of this candle is 170.86. So when the next candle trades above 170.86, that's the entry. The stop loss is down here. So this is kind of fun, because we're going all the way back to the beginning of tonight's call and say the mental part of trading, right? So you would have gotten in here and the stop loss would have been down here. And now within a couple of candles, you actually get stopped out on this trade. Now, an hour ago, you would have like, oh my God, I'm the only person who has a losing trade. Oh my God, trading stinks. Oh my God, trading, I'm a bad trader. Not anymore. If you're part of my community, if we're working together, especially if you're in the boot camp, you know what you're going to say when you get out of that trade? All right, it was a good trade. It was one of the strongest stocks on the board. It just didn't follow through. But here's where you separate yourself from somebody who really wants this and is not a whiner, somebody who's not complaining. Somebody says, I'm in charge and I'm going to succeed. Right here. Right here. Right here is well bid candlesticks. Okay, is this an inside candlestick? Even if it was, it didn't trigger. We're going to focus right here. So just a couple of minutes after we get stopped out, the second entry we're looking for is a well bid 5-minute candle. The entry is at the high of this candle. The stop loss is here, and a good almost $2 move into the close. So I want to actually finish up with that, because we're actually finishing up with how we started about the mindset. That inside candlestick gives us defined risk, very easy entry point. But here's the key. Remember, I talked about this all the way at the beginning. If we work together, I'm not going to teach you how to be a better chart reader. I want to teach you how to be a tape reader, to put those pieces together, to think the right way, to act like a trader, so that if you put on a good trade that was the right trade that doesn't make money, I'll be right there patting you on the back, typing to you in Slack and saying, that was a good trade, look for the next entry. 5 or 10 minutes later, you got the next entry and made that all back 3 times. That's the value of being around a community of people who are trying to be traders and not whiners. And I use that jokingly, but you have to sometimes look in the mirror and say, do you have the woe is me attitude? Or are you saying, you know what, every trade I'm going to learn from, and that's what that means. That's that little thing that we just went over in that 5-minute window separates somebody trading at home and not knowing any better, saying, you know what, I still like this idea. I just happen to get stopped out on that idea. I'm going to look for another entry because it's still really valid for reason 1, reason 2, reason 3, reason 4, reason 5. 10 minutes later, you got another entry and made all that money back and probably 3 times that amount. That's what it means to be a trader. If you're in my community, I want to teach you how to be a trader. And that's what we do every day. I have to be honest with you. Oh yeah, I want to show the trade. I'm going to actually post the link. I'll put it in here, but I'm also going to post the link. I want to show you how to be a trader. I want to show you how to, I want to show you how to make decisions. I want you to be the asset. I want you to be the reason that you wake up every day expecting to make money. That's my goal. That's my job. It's not about me. It's about you. My goal is for you to ask me questions, me show you what it looks like, me show you what A+ trades look like. And then you say, I'm starting to understand it. I'm starting to lose less. I'm starting to be in more winning trades. That's my goal for you to have the confidence to wake up every day and say, if there's money to be made, I'm going to get it. I want to show you the screen real quick. So I want to introduce you to a little bit of where to find this. I'm actually going to post the link here, but I'll pull it up on the screen first. So if you go to the website, you click on the Start Here button. There's a template here for a trading plan, but I want to scroll down here to this one here, the Trading Journal. So we're going to open that one up. You can actually see that I have 3 different videos for what to write in your trading journal before the market opens, so pre-market, what to write in your journal during market hours, and then what to write in your journal after the market closes. So I'm actually going to type this. I'm going to paste this into the chat so everybody can take a look at that after hours. And yep, okay, it's in there. So I'd like to ask you for a favor, just 3 small things. First, I'd like to thank you so much that you showed me so much by being here tonight, everybody. We've kept a nice level of members in the call tonight. I just want you to know how much it means to me that you showing a burning desire to be here tonight. That means a lot. That really means a lot. That means you want to be successful and you're taking it a step further than logging off and leaving the market behind. You're here tonight. So I just want you to know how much that means. You should be proud of yourself tonight. The second thing is I posted the link in there to learn about the boot camp, and I posted in the Wall of Success. It's one thing, again, for me to say that it's awesome and how much we put into it, but when you see other traders being successful, that should start to really resonate with you, because it's not just me saying it, it's other members in the community. And we just posted in there the trading journal, 3 different ways and 3 different types of times during the day to write a journal. So we're over an hour right now. I just want to say thank you so much. I'm super happy this was our first call together. I'm probably going to do these once a month. So if you want to wait another month to have another call, that's fine. If you want to do this every day with me, gosh, I'd love to see you make an investment in yourself and get into the boot camp. So have a great night, everybody. The replay will be available, I promise, within the next 24 hours. I'll send an email out to everybody. Have a great night, and I'll speak to you soon. Thank you so much, everybody.